Leiderman, who's Chief Economic Advisor to Bank Hapoalim. He joins us live from Tel Aviv Stock Exchange. Thanks very much for speaking to us. So, right now we're seeing central banks around the world refocusing on supporting growth. We had the Bank of Canada saying there's a diminished need to raise rates. Sweden's bank has said something similar. We're expecting a reversal from the ECB here in Europe. How do you view this situation?
Yeah, pretty much as you described it, Maryam. The tendency will be now to easier monetary policy all over the place, especially due to the weakness in the real economy. However, I think that this is exactly the time to put the emphasis on the important things that do not belong to the territory of monetary policy that are key for the markets, and yet there we see little change. And I'm referring mainly to fiscal policy and to the expectations for the speech of Mr. Obama this evening.
So what you're saying is that there should be more emphasis on the governments, that it's down to national governments to do more to stimulate growth, to deal with these economic challenges. There's only so far central banks can go.
Exactly. I mean, when I look at the current yields to maturity on bonds of the Spanish government or the Italian government, and we see yields to maturity close to 5%, to me as an economist, this seems like a non-sustainable situation. And we are talking about countries that are going to have tremendous needs of rolling over their debt. Clearly, with the growth rates in the economy so low in Spain and Italy right now, and with the political limits on how much austerity they can bring in, a situation of issuance of new debt at those rates is clearly something that will make the countries non-solvent. And therefore, we are back to the issue of, a major debt problem in the Eurozone area.
And you've sort of summed up a catch-22 situation, because as those countries come under pressure because of fears about growth, because of austerity measures, their borrowing costs are going up, and that puts the ECB in a position where they are the last backstop mechanism. They are forced to intervene in the market or to stay in the market.
Sure, definitely. And I mean, one expects if worse comes to worse, one sees a new Lehman-type situation developing in the Eurozone due to, say, the failure of some major commercial bank in the Eurozone. Of course, the ECB will be the first actor to step in. But I guess, once again, whether the interest rates set by central banks set at their current levels or are slowly reduced right now, it seems to me that the market is sort of voting some sort of a no-confidence vote on the overall economic scheme of the countries, including fiscal policy, including the solvency issue.
Well, thank you very much, Leiderman in Tel Aviv.